Today, Bitcoin sinks below $21,000 again. FTX tries to track down $500 million in stolen crypto to pay back debts. And Adelman of Lolli shares his outlook for crypto this year. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Cryptocurrency spent yet another day in the red as investors weigh fresh economic data, mass layoffs in tech, and the latest headlines in crypto. We'll get to those in just a sec. But first, by noon Eastern, Bitcoin slipped below the $21,000 mark, Ether dipped to $1,500, and Dogecoin ticked lower, trading around 8 cents. While crypto prices are hovering near their highest level since the collapse of FTX back in November, many experts are still cautiously optimistic.
You have some signs of easing inflation, which is better for crypto assets, risk assets. Two, you have some excitement around staking, which is set to come up here in 2023 with the Shanghai upgrade around Ethereum. That actually kind of kicked off this rally before Bitcoin and some of these other large cap crypto assets were moving. Some of the staking protocols we're seeing price action first. So there's that impact. And then the last thing is just a lot of the forced selling you had, whether that was tax selling or forced selling from Bitcoin miners, funds around the FTX collapse, that happened. So November and December were actually some of the highest volume months ever for Bitcoin miners selling their BTC holdings. So with a lot of that forced selling out of the market, it formed an attractive bottom for a number of market participants. I think it's a local bottom, right? There's some credence to this being a bull trap. I think if you extend this rally a few more weeks, though, there's still a lot of capital that is sitting on the sidelines that hasn't entered the space. And so if you do start to see the rally extend a few more weeks, you're going to see some of that capital come back into the space. So for the near term, it's a positive outlook. But that being said, I don't necessarily think we've started a whole new crypto cycle.
All right, let's talk about those top stories. First up, Digital Currency Group is suspending its dividend in an effort to keep cash on hand. Bloomberg reports that the company sent a letter to shareholders on January 17th saying the business was focused on strengthening its balance sheet by, quote, reducing operating expenses and preserving liquidity. DCG's Genesis trading was hit hard by the FTX collapse. The company warned it would have to file for bankruptcy if it couldn't raise funds. In turn, Gemini's customers lost access to nearly $1 billion in funds on the Genesis platform. At the same time, Grayscale's Bitcoin Trust, which is the biggest crypto fund in the world, has been trading at a huge discount. Grayscale halted redemptions, which led to a class action lawsuit claiming, quote, mismanagement on Grayscale's part. Next, bankrupt crypto firm FTX says nearly $500 million worth of assets were stolen in hacks. FTX total liquid assets stand at around $5.5 billion, according to a report called Maximizing FTX Recoveries, put together by lawyers and advisors for FTX debtors. But that total includes around $323 million in, quote, unauthorized third-party transfers out of FTX and $90 million out of FTX US. Another $2 million was stolen from Alameda, bringing the total to around $415 million. The exchange says it owes its top 50 creditors around $3.1 billion, which is to say nothing of its thousands of customers. Last, Coinbase plans to wind down operations in Japan. In a blog post, the company blamed market conditions for the change in strategy and said it would halt deposits on January 20th. Customers now have until February 16th to withdraw their holdings. The move comes as part of a larger effort from Coinbase to right-size its business in the crypto bear market, including cutting 20% of its workforce just last week. All right, for our main story, we are turning back to the markets. Crypto World's Talia Kaplan spoke with Adelman of Lolli about Bitcoin's outlook for 2023, given the industry-wide uncertainty.
Okay, let's talk markets. Bitcoin has been trading above the $21,000 mark for the past few days. That's the highest level since early November before the FTX bankruptcy. What do you attribute this rally to? Is it the recent CPI data that showed signs inflation is easing? Or is there more to the equation?
A few things are contributing, I think, to the Bitcoin price increase. I think we hit a floor after the FTX catastrophe is probably the best way to describe it. And there's nothing really holding Bitcoin back at this point. I think it was sort of an artificial dip based on complete outlier. So I think we're going to see Bitcoin continue to rise as there is increased adoption and demand for a very scarce asset.
So, what does this rally signal to you? You touched on this, but is this potentially the beginning of the end of this crypto winter we're currently in? What do you think?
I think it's a healthy increase, and I wouldn't be surprised if we sort of had a new happy price point at 21. But it does seem a little bit early to say that we're going to go back to historic highs, just given the global macro right now. We're seeing consumer credit at all-time highs, meaning retail is probably not going to be continuing to adopt. I do think that a lot of the institutions that were set up year ago to get into the Bitcoin and larger crypto space, they've been ready to deploy, and I think they're looking for that bottom. So I think that's more what we're seeing here. So we've seen some very large buys by some whales, less so retail, and I think that I think we're seeing as institutions starting to accumulate. So a lot of the funds that have been set up, a lot of the banks that have been set up are now high net worth individuals are starting to come in, but not so much retail right now.
So here on Crypto World, we have been reporting about many layoffs in the space, especially following the collapse of FTX. And because of that failure, a lot of crypto investors lost trust in the industry. So how's your company doing amid this backdrop? Have you noticed a lack of trust in crypto? And have you had to downsize, or are you considering cutting staff to curb costs in this environment?
We've always been very cognizant of what we're spending, and we've been quite conservative because we're playing a very long game. We have not done any layoffs. Fortunately, we're very much in a position of power right now. Part of our business that is differentiated from other crypto companies is that we give Bitcoin away for free through a cashback business model. So for us, there's way less risk for consumers to get into it. And while overall consumer spend is, I think retail is getting a little bit more conservative with their spending behavior. What we're seeing across our data and across the more macro data, people still need to buy groceries. They still want to buy things, and they want to earn on their everyday purchases, on gas, on their coffees. So people are going to keep spending, and our user behavior is more tied to spending than it is investing. So while retail is really kind of scaling back their investing behavior, they're scaling up their saving behavior, and they're still going to be shopping. So as long as people are shopping and wanting to save, I think they're going to want to still use Lolli. And I think our real thesis is like we're immune, or hopefully immune, to a troubled economy. I think that as people sort of leave this age of opulence and go into this moment of saving behavior, I think that's what we're really like waiting for. So people that want to save money, they want to earn cash, they want to earn Bitcoin. We let them earn both. They choose, and so we may see an increase in the adoption of our cashback product, maybe over our Bitcoin product over time, and maybe over the next couple of years. But right now, we're growing. While the times are kind of tough right now on the macro, we're very excited about our personal growth.
So Congress is back in session, and this week we learned that House Republicans are launching a new subcommittee to take on crypto regulation. How do you think regulation will change how crypto companies operate here in the U.S., and how will it impact your business?
I'm personally excited for regulation. I think that's like a little bit of a contrarian take amongst my fellow Bitcoiners. But I think we see things like FTX and FTT and Terra Luna, and a lot of these stem from having little to no regulation. So we operate, we as a collective industry operate in this gray area where we're piecing together rules that are archaic, and the U.S. government, which really like sets a precedent for the entire world's regulatory stance, have been laggards in even addressing the crypto industry. And so I think that I've always been a proponent that the crypto industry needs to talk with the regulators to help steer them in the right direction so that America doesn't get left behind. I think one of the scariest things that could potentially happen is if we break that communication or do not, if the government is not working with leading companies like us and Coinbase and other industry leaders. And that world scares me, where they're just making decisions in these silos that hurt the industry and ultimately give other countries and founders in other countries, CEOs in other countries, the ability to outpace American innovation. So when you look at the entire crypto industry, many of these companies are built in the U.S. And I think we have such a culture of innovation, but I do not want to be personally left behind as a company or as an individual. I think we have such potential to really build the most innovative products in this industry and drive it forward.
Okay, that's all for Crypto World today, but we are back again tomorrow and we will see you then.